All right. Hello, everyone. A higher time frame review. It is currently Tuesday, 23rd of May. So let's dive right into it. Now, if we start off with the dollar right here, we have currently swept the previous week high right there. Now, notice how we are currently rejecting off of that previous week high. This is, and this could be, a reversal day where it is rejecting like this, and the next day could be a down day. So that is something we have to take a look at. Of course, we are a little bit trying to call the top right here. So if we do want to look for lower prices, I would want to see something on the 4-hour and then potentially catch something on the 4-hour. Now, tomorrow is Wednesday, and on Wednesday we have FOMC, I believe 2 p.m. So dollar could be a bit slow until that FOMC, and that FOMC will tell us a lot on what the dollar wants to do the rest of the week. Now, right here, we can apply a filtering process, because if we know dollar might be consolidating tomorrow, then tomorrow I would want to avoid everything that is included in the dollar. So that is all the majors, etc. Then I would only look at the cross pairs, and we'll dive deeper into that in the execution week. But that is something to take into account, that the dollar tomorrow might be consolidating and a little bit slow until that FOMC release. Now, in the Discord today, I said we were creating potentially a 4-hour fair value gap after creating or after sweeping this previous week high. Now, let me remove this right here. We didn't create a 4-hour fair value gap, which is interesting, because then I was saying, if we did create a 4-hour fair value gap and we did trade back into it, I would want to see how we react off that 4-hour fair value gap, and potentially we push higher. That didn't happen, so we already closed it immediately. So that is interesting to see that we are clearly right now rejecting off of that previous week high. But obviously we can't just simply take shorts right now. We still have to wait for more price action. But it is something to take into account, because this is candle signs right here, candle signs. All right, so if we go through the pairs right here, Australian dollar CHF, we were rejecting right here. On the previous day, we swept some liquidity into this order block, overlapping fair value gap right there. Then on the 4-hour, we didn't displace higher right here. We came into this 4-hour fair value gap. Nothing much happened. Again, if it still wants to continue higher, then it will likely still continue higher off of here. I wouldn't expect it to come lower right here. All right, but again, that's all a bit iffy. Right here, yes, we had this first day. Now, if we go into the 4-hour, we had no fair value gap created in this leg up. So this morning in the Zoom, we did some live stuff, and there was no fair value gap created here. So I was like, all right, I'm not too sure if this wants to go higher, because right here, no fair value gap in the leg. Obviously, then it isn't a protected low. So this could very well head towards this fair value gap, potentially continue up from there, or something along the lines of this. Now, I wouldn't want to see this order block right here get disrespected. That probably overlaps as well with this right here, the mean threshold. So something along the lines of that. I wouldn't want to see that get disrespected. And again, if this low is going, then it's very likely that this low is also going. So that's something to take into account. But again, it is currently all dependent on the dollar. And for ES is a major, so it is very dependent on what the dollar is going to do. And that will, tomorrow will tell us a lot on what the dollar does want to do. Then we had GBP Canadian dollar right here. We came into this fair value gap. That could be a target right here, even the daily fair value gap right there. Then on the 4-hour, we had this breaker with overlapping fair value gap. Now, we didn't quite respect this. We had one wick higher, but we did come lower. Now, did we sweep this low right here? We did, actually. A very little sweep. So again, right here, this is a bit in the middle, right? I've today on the Zoom, in the live session, I touched on a lot. Currently, a lot of prices are in the middle, and you'll see if we take a look at EU, for example, right here, yes, we had some price action. Yes, it moved lower. Would you want to trade this on a $10 million account? Probably not, right? This is not the highest probability, and it's a little bit in the middle. It's not in a clear discount. It's not in a clear premium. So it is currently just a little bit in the middle, and tomorrow during FOMC, we will likely see more price action, and we will likely set the tone for the rest of the week. So GBP Canadian dollar, again, same thing, right? A bit in the middle. So just we need some more price action to work with. Then on AU, we are having a sort of the same situation. Now we have an order block potentially creating here. So if we do want to continue lower and head towards these lows, then I would not want to see this order block fail. So this order block ideally should get respected, and we shouldn't come back above this high. Of course, we could sweep it, but not a close above that high. All right. Euro, let me take a look at the 4 hour, by the way. 4 hour, could see if we create some sort of fair value gap that is overlapping with this low, that would be ideal. So a fair value gap here, then we would likely see something along the lines of this. Right now, we could still sting into this fair value gap and then a continuation lower fair value gap right here overlapping with that order block. Could happen. All right, Euro New Zealand dollar. This is the most interesting pair right now, in my opinion. Right here, we have an order block. We had this daily fair value gap. It's overlapping with the low of the order block. Very nice. So if it does want to continue lower, right here, if we take a look at candle signs, we are currently rejecting. So for the next day, I would expect lower prices right here on the next day. So if we open tomorrow, I would expect lower prices. Now, obviously, this is not guaranteed, so don't take my word for it. But that is the highest probability what would happen based off of candle signs. Now, we also have a news driver for the New Zealand dollar during the Asia session. So that is something to take a look at and see how it affects trading. And around those days, it is kind of affected the trading, because you'll see the cleanest moves around news. They happen around news. All right, so right here we are coming into a 4 hour fair value gap. Right now we are not fully disrespecting it, so that's something to take a look at. But again, this daily is stronger than a 4 hour fair value gap. So daily, obviously stronger. It's the bigger brother, so it will likely, if it does want to continue lower, then it will likely continue lower off of here, and that 4 hour fair value gap might see a little reaction like we're seeing now, and then some sort of continuation, if it does want to continue lower, of course. Then that 4 hour fair value gap would be very interested if we came off of a clean monthly discount rate. Then I would prefer the 4 hour fair value gap over the daily fair value gap, because then the 4 hour fair value gap has an even bigger brother, as in the monthly is supporting that 4 hour fair value gap. So right here, we do have a previous month low sweep. But again, I wouldn't just take a random previous month low as a discount array on its own. I would want to combine it with some sort of fair value gap or some sort of other discount array. So I wouldn't take that previous month low right there as discount array on its own. And if it was a discount array in the form of a monthly fair value gap, then I would likely take this 4 hour fair value gap over the daily premium rate right there, because then we have the monthly supporting this leg up. All right, EU, we talked about it, right? GU, a lot of liquidity. That's the first thing I know. There's a lot of liquidity there. So if we come into some sort of discount array, we could take out the liquidity, but again, GU, same thing. It's a bit in the middle. There's no clear premium rate, no clear discount rate currently. So this is still, for me, I would want to wait. We could still target this potentially. Weekly fair value gap right there. Could be targeted. Right here, order block, if it does want to continue lower, I would say, all right, this order block. But again, there's a lot of liquidity here. I don't like this price action currently. Don't like it. But if it does want to continue lower, I would want to see it continue lower off there. USD JPY, this one was interesting. We had an entry right here, an hypothetical entry. I didn't actually enter this because I was waiting for the 1 hour. We had, so let me remove this because it will likely only confuse you right now. All right, we came into this monthly SIBI, right? We had a previous week high. This line is the previous week high. Now, the next thing I would want to see is some sort of 4-hour shift. That is a thing I would want to see before we start calling a top. So some form of ST, an ST created. So right here, if it does want to continue higher, then it will likely continue higher off here. But remember what I told you yesterday. I told you, take a look at the daily candles right here. Are we rejecting or are we not rejecting? So we are either body closing above that high or we are rejecting in the form of wicking it. Right now we are wicking it. So that is interesting because then the next day could potentially head at least towards this previous day low. So the next day could head lower towards this daily fair value gap that we talked about. So that is interesting to take a look at. So note that we have a daily. Daily is currently respecting that high. It's rejecting away from the high, from the previous week high. All right, now for the ST, I said if we get some sort of ST right here, I would be interested. Now, I personally was looking at the 1 hour for entry confirmation, but again, that's not relevant. That's not relevant right now. For an ST, let me dive into an ST a little bit deeper. I should probably make separate videos on explaining ST, etc. That would be nice. Would be nice. It would be more convenient. All right, so an ST is the same as a BPR, a balanced price range, but also not. So let me explain that right. Right here, this could be considered, we have a little overlapping fair value gap, could be considered a BPR, right? If this wick was right here, and that wouldn't be considered a BPR. So BPR is just an overlapping BISI with a SIBI, or an overlapping SIBI with a BISI. That is considered a BPR. This right here would not be considered a BPR, but it would be considered an ST. An ST is an ST because of the context behind it. So it's very important to recognize we are waiting for some sort of confirmation. That is always when you wait for an ST. So if we wait for some sort of confirmation in the form of maybe this order block, for example, then we want to see displacement into the order block and displacement out of the order block. That's all. And displacement, of course, definition, fair value gap. So a fair value gap into the order block and out of the order block. That's it. And they don't need to be completely overlapping. They are, an ST is not something set in stone. It's just displacement in, displacement out. That's it. Of course, coming from something on the, some form of discount of premium rate. That's important. So let's see if we can find, as I call them ugly STs. So they are not the best STs, but I would still consider them as STs. Let's take a look right here. Yeah, right here. Let's say we came into this. Let's say maybe this was a low time frame. There was some high time for premium rate right there. Then right here, we came into a premium rate, for example. And right here, we have a BISI. All right, we have displacement coming into the premium array, and right here we have displacement going out of the premium array. And that's what I would want to see. They don't need to be perfectly overlapping. It's just displacement in, displacement out. That's literally the definition. And into what and out of what? Premium and discount arrays. Same thing right here. We have displacement in right there, then displacement out. that would be considered an ST. There's also fair value gap right here, but if this wasn't there, then that would still be considered an ST. All right, perfect. Perfect. I hope that makes sense. And again, if you're trading indices, I would also count if there's one volume imbalance and one fair value gap, I would also count that. So if either one of the fair value gaps is a volume imbalance, I would still count it as displacement. All right, I hope that makes sense. All right, so this could still head lower. Right now, it is waiting for price to show its hand. And this is what you can call low probability conditions. That's, of course, something we'll get into in the execution week more. But right here, we have to wait for price to show its hand. There is, yes, we can speculate, but like I said in the live stream as well right here, speculating and your analysis, it's always whether it's right or wrong, or whether you actually look at it, or how can I call this the best way? Whether you actually pay attention to it playing out, etc. It will always take some sort of your ego. As in, if you're constantly trying to predict price in low probability conditions, that will hurt your ego. And that's normal. We are human beings, but that will hurt you eventually. And over time, if you are constantly seeking out low probability conditions and you are trying to predict price on the higher time frame on low probability conditions, then that will eat your brain. As in, you will start to doubt yourself eventually and think, oh, I'm wrong very, very, very often. How can it happen? And you will start to doubt yourself and you will think, oh, I don't know anything. I'm stupid. I'm an idiot. And this will create a negative cycle, etc. And that's not what we want. This will be absolutely detrimental. So that's why it was on USD Canadian dollar, I believe. Yeah, right here. Right here. This is a pair. Don't even bother doing a prediction on it. Don't even bother trying to figure out where it's going to trade next, because it's low probability conditions. And just when I see a chart like this, I'm just like, all right, I'm not even looking at it. Just save that. And that's something we'll get into in psychology week. Save that mental capacity, save those brain points for a better opportunity for high probability conditions. And you'll see it becomes way easier. If we do take a look right here, right? It's just not something I can pretty much tell almost instantly when I don't like a pair. And NASDAQ, I explained already, it's so high, I don't like it right now. All right. So I'll see everyone tomorrow. So keep an eye on the dollar, and mainly right now, note down tomorrow FOMC and note down the candle signs. So note your candle signs. That's very important. Of course, we still have 5 hours until the close. So if we do close above that high, story would change. So note the candle signs. That's your study right now with the FOMC. So see if you can try to predict FOMC. And it will be a bit difficult because right now we are a bit in the middle of nowhere, but mainly based off of candle signs, and think in probabilities, of course. Always in probabilities. All right. Thank you.